Hello, it's Quant Trade Edge again. I'd like to do another wrap-up now that we've had a reaction to the FOMC meeting. I wanted to follow up on what we were talking about earlier. The first thing we were talking about was gold. And by the way, I now have my little hash marks pre-programmed. Still need to just spot check them to make sure they're right, but they look right. What we were talking about earlier today is a set of divergences. If we look at the 14-period RSI, and that is the low, let me blow this up, and let's focus on that one indicator. The low in the RSI came over here, and then the second low in price came at a higher RSI. And, we had this here pre-FOMC, but again, as it goes back to time of day, don't get into this trade before the FOMC. You would want to wait to see some sort of overreaction like we did there. And again, it's a higher ROC, a higher RSI. So this is very similar to the crude oil trade from, I believe it was yesterday or the day before. And that's a perfect setup. In fact, so perfect that I was out running errands, but of course I had to check in and made the comment that, it has 3 divs, but given FOMC, I wouldn't be surprised for it to go down to put down one more tail. And I think I'll be waiting to buy that tail. So that was 11:58 Central, about an hour before the FOMC reaction. And that's how you would use this information. Just because you have this 30 or 60 minute pattern, you don't jump on it right away. You hone in on a very small time frame and catch that. So that looks like it's done. The bottom is secure. And if you notice now on the daily, we have an amazing setup bar. After this run to all-time highs, we've had a string of 1, 2, 3, 4, 5 down bars. 1, 2, 3, 4, 5, 6 down bars. Because this one's considered a down bar. And we're closing with a long tail, a green body, everything we need, such that overnight, if we take this out, we're ready to buy a 15, 30 minute pullback, whatever it is, depending on when it takes that out. So that is gold. And the other thing I wanted to point out was the Australian dollar, because 2 patterns showed up there. I was watching this on a 2-minute chart. And the first thing is, the rhythm of Fed Day is typically the first hour after the announcement, which is this 1 o'clock to 2 o'clock. You get 2A action. This chopped down, chopped up, came back down. In fact, I think a lot of things look like that. Gold maybe did the opposite. It went up, down, back up. And then, call this 2 o'clock, we're starting to trend. And it's a little more prolific here in the Australian dollar, where after that first hour of chop, second hour can trend. Now, the reason I pulled this up is to show you a very simple pattern that we saw yesterday. I believe it was in crude on the 1 minute, that gives us a great risk reward, and that is over here. We have this little pullback, this little 2-legged pullback. This whole thing here is a hoagie, so you could wait for that to break. What I did instead was wait for this bar to break and go ahead and put in the tight stop. And, as you can see, that's already given, 1, 2, 3, 4, 5, or 6 multiples there. But this also morphed into another pattern that we've been studying. And that pattern is the cup and handle. So, granted, this is a 2-minute chart, so this is a microcosm of the cup and handle that the William O'Neill crowd teaches, but it fits the criteria. We have this bottom. The right side of this is full of green on the volume bars, and then we had let's put a rectangle there. We had a hoagie right here, and while we had that hoagie, the ATR3 divided by the ATR20 dropped below that 0.6, 0.7 level. In fact, on our first entry here, you can tell from the compression, we got to 0.514. And then again right here, we got to 0.513. So those are very low. Remember 0.7 or 2/3 is roughly what we want to look for. And then to accompany that, we also had volume dry up. This right here was this volume, which was pretty much the lowest volume since the FOMC announcement on this bar right here. Let me blow that up so you can see it. On this little bar right here, it not only had a very low ATR, but it also had the lowest volume since the FOMC announcement, right? This is where we announced lowest volume. So those are a couple of the markings of this cup and handle pattern. And the beauty about this cup and handle pattern is, again, right here with 6.5 points of risk, 81 to 02, already up 20, already up 3R, and probably has more to go. That's just a very tight volatility compression pattern where, with the volume drying up, that's basically sell pressure drying up, and it's kind of a one-way ticket out of that pattern. So I guess we got to cover 3 more patterns in detail here. The RSI divergence that we saw on gold, and it even shows on the 60-minute. There we go. If this is the RSI, we've got one here, and the one that we got right after FOMC. And then on the Australian dollar, we got to cover 2 solid patterns, this ABC down and our, and I guess I shouldn't call it our, it's been around forever, the volatility compression pattern that I have now applied to the microcosm. This is not a daily chart, this is a 2-minute chart, but the exact same pattern occurs here, and there was your tight buy spot. So anyway, have a good weekend, and I will be out for about a week, and I look forward to hearing from you.